Hey everybody, Economic Ninja here. We're going to be talking about real estate. We're going to be talking about the mortgage industry and how it relates to real estate prices and the real estate boom right now. First, I want to go over just a quick little headline so we have this timestamp, because you guys know that I've been talking about the commercial mortgage-backed securities industry, or CMBS market, and in July, August of last year, I started talking about how it's going to collapse. It is going to be the mother of all real estate collapses for a myriad of reasons. You'd have to go back to see those videos to know what I'm talking about. But today, Moodys, before I start the normal refi market, Moodys assigns provisional ratings to 4 CMBS classes of okay, I'm going to try and break this down really lightly. So Moodys, Fitch, and S&P are always late to the game, and trust me, they know what's going on. They know the reality. But hey, they get paid. You know, let's just be honest. And they were famous for being completely 100% wrong, or late to the game, or lying, or whatever you want to say, in 2008 when they started to downgrade these different classes of mortgages, different types of mortgages. And right now they have just released 4 initial ratings, all of them AAA rating for these CMBSs. And I want to tell you right now that I believe by the end of 2023, well, no, you know what? I'd be shocked if you didn't see this by the end of 2022. CMBS market completely start to shudder and collapse, and go figure, Moodys is going to be wrong again. All right, so I just want to say that. So now let's dive into the normal refi rates. So I'm going to go back to this thing. So the other day, I got 2 emails in one day about interest-only mortgages. And I go, hey, here we go. Let's see what's going on. And so what I started to find is, you know, I've said this before, right now 5-1, 7-1, and 10-1 ARMs, adjustable rate mortgages, are priced pretty high. Banks are pricing in risk because I believe, in my personal opinion, not financial advice, that banks are pricing in the risk that they don't believe in, you know, 7 years, 5 years, 10 years, that the rates are going to be lower or the same as they are now. And so they believe there's going to be a lot of defaults. All right. Easy way. The housing prices are high. If people get into a 5-1 ARM at, let's say, 4%, interest rates are more likely to be 5 or 6% or 7% mortgages, rather than, you know, 3, 2, or 1% mortgages. That's what I believe banks are pricing in right now. So they're keeping those numbers high because they don't want to sit there and be stuck, because they believe that the mortgage price, the housing prices, are going to be less, if that makes sense, in the future. A lot of buyers right now just don't contemplate that. They can't contemplate that, and I wish they could, but that's all right. I'll just go buy up all the houses when they're foreclosure. That's just facts, you know. And it sounds funny. Every once in a while you get a comment like, I can't believe you'd make money off of people. And I go, yeah, well, have you ever, like, you know, gotten a really good deal on Craigslist or garage sale? What do you mean? And I go, yeah, have you ever found like a really smoking deal and you bought it up real quick? Like, you bought it up before someone else could? Yeah, well, you took advantage of that person. You got a smoking deal. You should have offered them more money. And then they sit there. Facts are, people make silly decisions all the time to buy something they can't afford, and then they lose it because they bought the house, but then they bought a BMW they can't afford, and then guess what? They're paying payments on a refrigerator. True story. I know someone that lost a house because they're paying payments on a refrigerator. You can't even buy a refrigerator. You should not be allowed to buy a house, but whatever. Point being is this. Right now, interest-only loans are about to start taking a surge in usage right now. People are going to start using them more. Why? Because they can't afford, first off, barely the down payment, because these homes are getting so astronomically expensive, but they can't afford the monthly payment if you're tacking in interest and mortgage. So those are starting to come back. So it says, recently, Standard Chartered Bank launched an interest-only home loan facility for its existing as well as new home loan customers on the purchase of completed residential properties. All right, and this article essentially just talks about what interest-only loans are. My point being is this is just one bank that's talking about this, but I got the emails from another bank. Okay, facts are, people can't afford the full payment, so they're going to try and find other ways to do so. All right, now you couple the high home prices with the high mortgage payments because of the interest rate just exploded in the last 90 days. The facts are, home buyers are going to slow very rapidly. Now, this is interesting because remember, people, we still have record low inventory. Okay, there's no denying that, and inventory will pick up in the springtime because that's normally just a seasonality issue, right? But I want people to really realize this too. Because interest rates have skyrocketed, in this 30 days, there have been almost zero refis, and you're about to see the wave of truth come out in quarterly earnings. Now, we're going to see in the month of March, probably by about second week of March, we're going to see news stories come out where mortgage companies are already giving earnings previews, right? Where they're like trying to warn the public or their investors, okay, look, we haven't had the best month, okay? Refis are down. We just want you guys to know, okay? We can't tell you the real numbers. We don't have them all yet. We're figuring it out. But they're trying to pre-warn so that investors don't run for the exits and liquidate their holdings and cause the stock to plummet in value. And then the company's in trouble because it's having a hard time borrowing money. That's a whole nother video. My point being is this. They're going to preview. We're going to see those previews. But the truth will come out in the quarterly earnings. And I believe you're going to see quarter one for mortgage companies be abysmal. It is going to be absolutely blood in the streets, unless for some reason interest rates take a nosedive on mortgages and then people start spurring their refi activity. You know, a lot of people, a large majority of the country right now have been in mortgages for multiple years now that are much lower than today's prices. So there's no reason for them to go and tap into their home equity unless they can't pay their bills. That is where I believe you're going to see another resurgence in mortgage, lending finance in that kind of situation. Although, to be honest with you, you wouldn't usually use a typical, somebody in debt wouldn't use a typical refi. They would probably go into a home equity line because they think of it like a short-term loan, even though it's like a long-term debt around the neck. Don't do that. Debt is like death. It's like slavery. Honestly, think of it that way, and you'll live a really good life, real peaceful life, prosperous life. All right, let's just say that. So the other thing I want to point out is that when we see these quarterly earnings, you know, unless interest rates take a nosedive, if you think about it, and people start refinancing like crazy, people are still going to have to deal, the banks are still going to have to deal with the first half of that quarter being abysmal. All right, so because rates were high all through mid-January and all of February, okay? So I really don't think there's a whole lot of hope for mortgage companies. Now, with that being said, also, you go through a full quarter of no money, no income, because you're not making refis, you're not charging points, and some of these loans, most of these loans, are charging like 1.5 to 2 points. It blows my mind, especially these companies like Rocket Mortgage and all these kind of guys, the online guys. You're going to start laying off people. That's going to have, again, another effect like of people not getting pay, so they're not spending into the economy. So I believe that by June, you have higher unemployment, and you have, with these higher interest rates, coupled with high fuel prices, holy cow, guys, it's going to be the perfect storm. So do me a favor, hashtag perfect storm, hashtag Ninja Nation in the bottom, and then I know you made it to the end. But I also thank you for this, because this is a movement, guys. We're going to stand up as a nation of human beings all around the world and say, no, enough's enough. We're going to get out of debt. We're going to have some money aside. We're going to have some real value, some real wealth in our hands that's saving us from inflation, from what the bankers are doing. And then when this crash happens, we're going to buy up everybody's stuff. And then we're going to be good human beings. But the true way to take over this world right now is to control the money supply for ourselves. All right, guys, that being said, the Economic Ninja is out.